Welcome back to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And today, we're talking about how to cut through all the noise and navigate the different investment opportunities that are available to you as a high-earning doctor.
And I look at their tax return, I'm like, yeah, but these assets are creating a lot of taxable income for you too. The one thing you don't need is more taxable income. You do want to build your wealth is why you're doing this, but you can do it in a way where it's not creating taxable income.
I think this is something that is really indicative just with doctors. They're really good at school. They're smart, intelligent people. They don't want to look dumb. And so they don't want to ask questions that they might feel, oh, this is a dumb question. Ask the dumb questions, all of them.
Hi guys, it's good to be here with you again. I'm excited to talk about this because so many of our topics come from these conversations we're having with all these doctors. And something that has been coming up a lot is just the analysis paralysis and the overwhelm and the noise that's out there when it comes to where should I invest my money? I have this excess income, more than I need to live my life. I've got it sitting in an account, but should I invest in real estate? Should I start a business? I don't know what to do with it. So it's just sitting there. And I think there's a lot of fear in making the wrong decision.
Yeah.
And so I wanted to talk about offering some advice on how to navigate these different opportunities. So, Bob, I'd love to hear what you think about this.
Well, I think this transcends beyond just physicians, but I think physicians are a great example because that's who we focus on and we work with them in a lot of our experiences with. But at the end of the day, I think it just comes down to what we've talked about in other episodes. What's your plan? What's your end goal? What do you want to accomplish? And just because, you use this story before. I was working at a company and I had a gal who was working for me. And so we just kind of did a monthly, hey, how things are going besides, the daily and weekly stuff. Just, hey, okay, let's see how the month was. And we're sitting there, I was sitting in our office, we're chatting, that sort of stuff. And all of a sudden, in the middle of our conversation, the phone rings. And she's like, oh, 1 second. She goes and picks it up. It's one of the doctors that we work with. She's having conversations, blah, 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 hang up. And she's like, it just gets so busy. And I'm like, well, why'd you answer the phone? She said, well, because it rang. I'm like, so? We were talking. We were doing stuff. We had a plan of what we were executing in our conversation, and you got distracted. They call it the squirrel syndrome, right? Every once in a while, I'll be talking to our marketing guy, and all of a sudden we're like, sorry, a squirrel. Right? And that's what happens. I think some of these deals sound really good, especially when they come from colleagues, right? This P2P, physician to physician mentality. This is we're part of this boys club, so to speak, this fraternity, women included, of course. And we trust each other because we're doctors. Okay, well, that's great, but it still doesn't mean that they know that your plan is X and that this great idea that fits their plan may not fit your plan. So how do you go about assessing what's that look like? Well, first of all, again, what's your plan? What's your goal? Secondly, look at the numbers. Well, I'm not a numbers person. Then don't do it. Because the numbers are logical that support the emotion of making the decision. The emotion has no logic to it. And after you do something, it's more expensive to get out of something than it is to get into something. Think about anything in life. Anything. Procrastinate on doing the registration of your vehicle.
Correct.
Right?
It will be more expensive.
It'll be more expensive if you let it lapse. It'll take you more time. It's just it's a silly thing. But it's just how life is. So do your due diligence. And if somebody's not allowing you to ask questions, is not allowing you to do the due diligence, then you say, thanks so much. I greatly appreciate the opportunity. Let me sit on this and think about it.
And don't be afraid to ask questions. So ask the questions. Don't be afraid. I think this is something that is really indicative just with doctors.
Yeah.
they tend to be fairly intelligent people. They're really good at school. They're smart, intelligent people. They don't want to look dumb. And so they don't want to ask questions that they might feel, oh, this is a dumb question. Ask the dumb questions. All of them.
Because the reality is the dumb question, air quotes, is information you just don't know. And don't you want it? Don't you want to know it? So it's really
Right.
not dumb. It's a question you don't have an answer to.
Right.
But that fear of asking it, right? To your point, Joe, of not looking like, oh, well, that wasn't a doctor question. Some of the best doctors that I've worked with, when we started that conversation, they're like, you know what, Bob, I'm trained to be a physician. I'm a really good physician and I'm great at helping my patients. But in this area, I just don't know a lot about this area. Nothing wrong with saying that.
Right.
Right. And to Joe's point, if you're asking questions, you set the stage for that, and they're still pressuring you, then that should be an indication of, maybe we need to take a step back, or maybe I need to hire somebody to help me assess this. Maybe I need to bring in so-and-so or whatever, or whoever's your team. You don't have a team, that's part of the problem as well. You need to have a team that can fill in the gaps of the knowledge and the expertise that you may not have, right? That's why nurses are so great in hospitals, right? They do all the day-to-day stuff and they fill in the doctor who's doing the rounds of what's going on with the patient, so the doctor can do what he needs or she needs to do in a more succinct way for all the patients, right? So you need to develop your team and understand that. So, because to Joe's point before, not all deals are bad deals. There's also a timing of deals. What do I mean by that? There's there's doctors we've worked with in the past. In the very beginning of our conversation, they said, we're really trying to build our practice. We really have some things we want to do. And so access to capital, access to the cash flow that we're working with really is important for the next few years and being able to build a practice in the surgery centers or whatever they're doing that they want to do. So, sounds great. So we put that into our mind, we put that into the plan, and here's how we execute it. But what ends up happening is that sometimes doctors don't share everything with who they work with. And we've had situations, right, Joe, where somebody ended up putting a pension plan in place for retirement. It's a great idea. It's a great asset, right? But the problem with it was that he did it for tax purposes, not really for retirement, because he was in his early 40s, late 30s. He was really focused on more on taxes. Well, the problem when he's doing something like that for taxes, what'd he do? He locked up capital.
Right.
And so what happened, Joe, and what was it, like the end of January, early February, we get a phone call, right? We jump on Zoom and share the story of what happened.
It was like the scene out of Happy Gilmore when Happy goes back to the coach and is like, I'm dumb, you're really smart. I'm ugly, you're really good looking. It was like that kind of tail between the legs. Like he's like, I will never make a decision without your input again, because he realized, and again, Bob, to your point, there's nothing wrong with what he did from a technical standpoint, but the order and sequence was out of place. And he just said, I will never do that again, because what we knew that he didn't realize at the time was that is going to lock up his capital. And then he ended up actually having to take out a loan for the business to cover expenses because his operating expenses were high. He was able to recover very quickly. So it wasn't a catastrophic decision.
No.
But the decision to implement with us would have accelerated where he was at rather than hit that, bottom.
And his cash flow that he needed and the loan he needed was within dozens of dollars of
Right.
Right. It was almost where I looked at him like, this is almost exactly.
Right.
It was really interesting. So anyway.
Well, and imagine having a team. So this is the vision that I would have for you as a doctor, is when your doctor buddies come to you and say, hey, I've got a really good deal for you, or I've got this investment opportunity. Imagine doctor being able to say, that sounds awesome. Go talk to my team about it. Because Bob, to your point, you don't want to be distracted from your plan. I've talked to numerous doctors who literally said almost the exact same thing, like some iteration of, if I hadn't made all these investing mistakes, I would be able to retire by now. Like they literally, as they look back over there, like if I didn't make that decision, and that decision, I would be able to retire now. But because I was, diverted off of my path, that's why I can't retire now. And so I think for you, don't get like that squirrel syndrome or the shiny object investing syndrome where you just see something that looks really nice and so then you go sink cash into it. Just be able to tell them, that sounds awesome. Go talk to my team about it. If they say yes and it fits in the plan, I'm in.
Yeah. Because I think if we were to look at a lot of these bad investments, and air quotes again for bad investments, they actually probably were really good ideas and strategies. They just were not in the right sequence of order. And so that's why it's so important. It's kind of like taking a cross-country road trip, right? You're going to map it out. You're going to map out stops. And if you got an electric car, you're definitely going to map out charging stations, right? But if you're just mapping out, how long can we drive? So we need to look at a hotel probably in this area. And so, okay, and then we're going to do this, right? You map it all out. But for some reason, when we decide that we want to build a business or retire, we don't take that thought. Why do we spend more time trying to do road trips with family than we do in the things that we do day to day? It's so crazy. But that's because you're with your family's with you, right? You're the leader. You want to make sure everything's organized. You don't want to be put in a situation that is a risky situation for your spouse and your kids and yourself, right? So you map this out to where you can optimize fun. Well, why isn't your business and saving for and building your wealth, why can't you optimize fun in that? I mean, imagine that. That's fun. And that's why when we talk about some of these deals, do they provide tax benefits? Do they make your tax plan and your wealth plan work in unison with each other? And that's important too, because some of these actually create more tax liability to you.
Right.
And so that's the one thing we see is that doctors come to us and they're like, I make a great living and I put some of this discretionary income after income and profits. We put it into these different assets. And I look at their tax return. I'm like, yeah, but these assets are creating a lot of taxable income for you too. The one thing you don't need is more taxable income. You do want to build your wealth is why you're doing this, but you can do it in a way where it's not creating taxable income. Oh, how do I do that? Oh, well, you just should have just structured it this, and this way. Oh, that's so easy. Yeah, kind of. It really is. Unless you know how to do that. Same thing as a patient, right? When you walk in the door with your patients, you've got their chart, you've got their test results, and you're like, okay, here's the game plan. Here's what we're going to do. You may be using some words that we have no clue. I think you probably made them up or they're Russian words, right? You're making up alphabet names here, but you're very confident and your patient's like, okay, well, what's this going to do for me? What are some side effects I need to look at? That's what we do. Hey, this is a great diagnosis. This is a great asset. Here are the side effects. We need to plan for these side effects. And here's how we're going to plan for them. Okay. And there is no silver bullet. There is no thing that's going to create no taxes. You're going to make 15% rate of return with no risk, and everyone's going to be smiling and everyone's going to be happy. Doesn't exist.
But
they'll heaven.
Right there. They'll sell it to you like it is. I mean, we were talking with the doctor a couple of weeks ago, and he was saying he's literally paying, what was it, like $3,000 or $4,000 a month to be in a quote, I'm going to put giant air quotes around this, a coaching program that shows him how to invest in real estate. I'm like, so someone sold you that you're going to pay them to show you how to invest in real estate. They don't know whether they have, if all you have is a hammer, everything looks like a nail. So all he's got is this giant hammer of real estate investments. So everything looks like a nail to him, whether it's right or wrong. That's what it is. So this guy who's selling this coaching, in my opinion, it's not coaching. By the way,
he's a doctor also.
Yeah, who's a doctor, probably not still a practicing doctor, I would imagine.
I don't know. Depends on how successful his selling $3,000 a month program is.
Yeah, that my guess is that there are enough doctors who are, or it looked like to me that's all he's focused on anymore.
But that's why he did it, because he trusted him. He was a doctor, right? The PDP, they spoke. They're part of the boys club, girls club type structure. And so I know this is something I should probably do with my discretionary money. Sounds good. I hear a lot of doctors talk about real estate. I see stuff on Facebook and all this kind of stuff. And all of those are true. Does it fit your plan? Well, I kind of don't really have a plan. Well, then it really doesn't fit your plan.
Or maybe it does, and it's like you're just going to be that one. So again, it's not that all these investments are bad. To Bob's point, is just, is it within your plan?
Yeah.
And I think that's the main thing, doctor, that you need to ask yourself is, number one, do I have a plan? If no, stop. Like, stop everything else. Create a plan first. If you want our help to do that, reach out. We're happy to help you. If not, find somebody who can help you create a plan that you believe in. And then ask yourself, the next thing, if you do have a plan, does this align with what I perceive my plan to be? If you have a team, again, full stop, go talk to my team about it.
That's good. And that was going to be my question in the beginning. Like, is there a tangible takeaway here that's like, these types of investments are a good idea, and these types of investments are, you should steer clear of, they're not a good idea. But it sounds like it, just like our tax plans, like, it's not one size fits all. It just depends on your unique situation and where you want to go. So how do you assess that? You can't assess an opportunity until you know what your end game is, what your goal is.
And you may not be at the point where you could actually have access to the tax code and the way you can get the best benefit out of that particular asset. Right? That's one of the things people talk to us about all the time is like, well, what about asset protection? Well, asset protection is important, but you don't have any assets to protect. You have your residence, your home, and there's things that we can do for that, but you don't have anything else. Or everything you've done has been the opposite of asset protection. Now you're at that stage where we need to actually start looking at shifting things. And so it really is based on not just your plan of building wealth and investments, but how do I protect what I built, right? How do I structure this to an end game again? How do I get the best tax benefits out of this? What if something happens to me? Is this something that can be controlled or taken over by my family or my spouse or, whatever? There's a lot of things to think about that we know to think about as we go through this process, right? So it's really important to know that, hey, this asset is a great asset, but you have these 3 steps you have to take first. Then let's do this. Okay, cool. So to Joe's point, not everything's a bad idea.
Yeah.
There's only so many assets out there, so many strategies out there. It's the sequencing that makes the biggest difference for every single person.
And it's so important to not just piecemeal it all together, which is what most people are doing. Yeah. Yes, I want to do this. And yes, I want to do this. And I just talked to a guy this morning who he's working with a tax attorney and he's working with an accountant and he has an insurance guy. I'm like, are any of them working together? Do you have to call all 3 of them each time and like get them on a meeting and like, is this a good idea? And that is the point of Terra Firma and our membership. It's like, no one else is doing this. You have created this membership where we take this bird's eye, big picture, all-inclusive view of everything you've got going on in your financial world. And because of that, you can help members assess these opportunities and how it aligns to their plan. And they're not getting that. They're not getting that elsewhere. So we bring that peace of mind and that just streamlining it all. So anything else you guys want to add before we wrap up this?
Oh, there's so much.
I know, but I'm here to keep your wrangle.
Well, I would add, we hear this a lot from people is they'll say, your membership is expensive. And I, Aaron, my response to that, it's like, compared to what? I mean, really, you got to ask yourself, okay, this membership is this much. That's expensive. Well, what I think is expensive is continuing to operate without a plan, continuing to operate without efficiency, continuing to pay huge sums of money to the IRS. That is expensive. That's actually expensive. So I think having that plan, optimizing your plan and moving forward, if you don't have like an accurate risk assessment for these investments that people are, bringing to you, that can become unbelievably expensive. There are some things that doctors, participate in that literally have 100% risk. It's a 100% risk, that can go to zero. You might take that $100,000 investment and that could literally go to zero. There are some investment schemes that actually can encumber you even further, where it's actually unlimited risk. And so you just need to be aware of that. And again, I can't emphasize this strongly enough. Make the decision to have a team, whether it's Terra Firma or another team. Have a team that is assessing all of this with and for you so that you can get to where you want to go. We would love to be those ones to help you. It's why we focus on doctors. We understand your world. We understand the nuance of all of it. Don't continue to land in the world of true expensive.
Thank you for all that. Well, thank you for listening. And if you find value from Wealth Mavericks, we would love for you to subscribe so you get notified each week when a new episode hits. Like, share with your doctor friends, comment, and let us know what you'd like us to talk about. And we're just really glad you're here. Thank you for listening. And until next time, go be a Wealth Maverick.